All right, we are live. Welcome to a YouTube live here. So in this video, we're just going to be talking about the weekly chart of the SPX or the S&P 500. This tracks the 500 biggest companies in the United States and is a great understanding of where the U.S. economy in terms of the financial assets are. So this covers really anything that is a major player in any sector within the U.S. Like I said, 500 biggest companies in the United States. So it's a big chunk of the overall market sentiment for the United States. So let's go over not just the current price action, but what I want to really go over is first the 2000 crash and also the 2008 crash. So zooming out, we can see this spans basically over 20 years, where we see 1998, the whole move up from the dot-com boom back in 94 kind of started, and then it took a absolute rocket ship from 96, 94, 95, 96, all the way up to the high of almost 200% increase, which is very substantial. And then this is 2008, where we saw the housing boom occur here, and then we saw the major market crash of the 2008 crisis right here. And then this is the current expansion that we are in right now. Looks very overextended. And we'll talk about these mainly, but just looking at the contraction and expansion phases of the business cycle, you can read more within the Modern Finance book. We see that these are expansions, very strong expansion, and then we see contractions, and we have not seen a contraction yet within the S&P or within the overall economy of the United States. And just before we go over this, I want to say that we are bearish on the U.S. economy. We do not think that this can be sustained. It's like the amount of QE that they've had to implement and the basically zero interest rates they had for the 7 years from the break until 2015, right around here. They had basically zero interest rates. The Fed fund rates were basically at zero, and then once they started to increase the interest rates, there was a bit of a meltdown there. But then they were able to actually get the stock market to continue upwards, and then they basically stopped interest rates at this point. And what we'll do is actually overlay the Fed funds rates within here, just so there's a good understanding of the correlation, not causation, but there is some level of correlation between the Fed funds rate as well as the S&P 500 and the stock market overall. So this is to compare. Fed effective federal funds rate. Oh, I did not do that right. Let's just go back to the SPX here. Give me one moment. We have to compare them. So this is the weekly chart here. Has to zoom out. Compare Fed funds rate. Okay. So there we go. This is exactly what I was looking for. So we can see, let's just take a picture real quick here. Now we have stalled. We have been at, I think, 1.55% for a while now. While meaning the past couple, but we can see that there is a correlation. When the S&P goes up, interest rates are increasing, and then we have a stall. And then when the interest rates start to go down, because the policymakers understand that they need to lower interest rates and try to stimulate the economy, the market crashes as well. So that's the overall ebb and flow of the market. Obviously, the interest rates that are at basically zero for a while now, that is very unnatural, and this is a major stimulation in the economy, because when interest rates are at zero, it really incentivizes banks and other entities that hoard a lot of cash to loan out cash for businesses and companies, which allows them to spend more, and that drives the economy. But we can see that the interest rates were basically at zero here for a very long time. And at the same point in time, we were implementing massive amounts of quantitative easing, or QE for short, just basically injecting the economy with cash, giving or buying financial assets from banks, and then the banks will have a excess amount of money, and then they want to ideally loan it out to people, which would then drive the economy, but that's not always how it goes. The banks don't necessarily have to actually loan it out to people. They could just hoard it, and that's where negative interest rates come in, but that's a whole other topic that we're not going to discuss today. So we're just going to talk about the price action of the SPX, and let's just take this overlay out and then talk about the current price action for the S&P. So we're just going to quickly talk about this right now, and then we'll get back to it after we've discussed the 2000 financial crisis, or the dot-com boom, as well as the 2008 financial crisis. So right now, we are still seeing higher highs, right? Which is pretty crazy. I thought within this volatility right here, we would see the top, but when we, broke the higher highs, so there's a trend line that connects these highs, and this wick right here touched it as a support. So if we connect those highs, we broke past it, retested it, validated it as a new support, and then started to continue upwards. So that is a validation just in terms of looking at the price action that we is still in a trend in the bullish side. So we're still on an uptrend, even though there was a lot of volatility here. And we saw that back in 2016 where there was big moves to the downside. We can see that all right here. But overall, we are still not seeing those lower highs form. So it's still a bullish move, and the market is still in a bullish fashion. Now, let's draw in some TA here to discuss the key zones that we're able to identify. This is that first zone that we talked about earlier, connecting the highs. So this is where I was looking particularly to see if we were able to bounce above or below this zone. And this is the squeeze I was looking at. There was a squeeze in price right here with the support and resistance. And I thought the price would have gone a little bit higher maybe here and then just continue on and then dumped after it broke the support. But I was wrong. I didn't place any money on any shorts here, but it's just I like looking at a lot of charts, and this was a potential play that could have been turning into a not so good opportunity for investors, but it actually managed to break up above this key level of resistance, retest it with a very, very strong pin bar bullish candle, and then we made a huge move to the upside, and we've been basically climbing ever since. So just in terms of the price action, it still looks like it has legs. I'm not going to say you got to short the market or anything. I'm only really short biased because of the fundamental side of things, but if you're looking at it objectively in a price action looks of things, it's still pretty bullish, and this is a key zone within the chart where we will probably pull back sometime and then try to test this zone. I don't know exactly when. It looks pretty overextended at this point in time, but this is a key zone that if we do pull back, I'll look for potential buyers here because it was a previous support or previous resistance, resistance all around here. Right here was a resistance, right here was a resistance, and then once it broke out, it really had to push, and then I think we could see a pullback, and if we are able to hold this zone, we could continue on our bullish momentum. So I don't exactly know how it looks right now for the shorts. I would definitely not be shorting at this point in time, but it does look like we are a little overextended, but it's pretty crazy to see the market still continue upwards. I don't know, it's pretty phenomenal. I definitely expected the price to not make this significant of a move upwards, but clearly there are buyers in the market. Don't know who the buyers are, but that is pretty phenomenal. So now that we've covered that a little bit, didn't want to sound too bearish at the start, so I thought I'd say objectively that this market is still trending to the upside. It is still bullish. We are not in a bear market looking at the price action right here, because in a bear market, you got to have lower highs and lower lows. And we've seen higher highs and higher lows basically from this whole consolidation. When we were in this zone right here, that was definitely right here. Oh, that was a little bit of a scary zone. Let's just try to get this right here, because then we made a lower low. This is a lower low right here, because this is a low and then this is a lower low. And then I was expecting to have some level of resistance at this zone, but we broke right above it, because what we can see here is this is the zone I was looking at. This was a previous key level of support, and then once we broke past it, we got no hesitation on the way up. We just broke right past the previous support and then made our uptrend continue. So that is a very bullish sign for the investors within the US economy. So now that we've gone over that a little bit, let's dive into the two previous market crashes. We can see that right here. We'll first go over the dot-com boom, and then we'll go over the financial crisis of 2008. So we're not going to get into the run-up too much. We'll just go over some simple price action patterns, but we're really wanting to see the change in price and the change in direction and the shift in trend when it actually inevitably does happen. So looking at this big run up, we see a lot of key things that occur. Previous level of resistance equals new support. Yet again, previous level of resistance equals new support. We see that a couple times here. But what I really want to get into is the actual breakdown of the lower highs and lower lows forming. So we can see, let's just talk about that actual process of the shift in trend, where let's get our little snip here. So this is a high, right? So this is a high where there was a resistance and it broke the high and made a new high. This is a low. It made a higher low than the previous low. And we see this happen over and over again. This is a high. This is a low, this is a high, this is a low, this is a high. So it's making higher highs, and higher lows. So this is a bullish trend because it is making higher highs and higher lows. The only time we can say that is a bearish trend on the bigger time frames is when we make lower lows and lower highs. So what does that look like? Well, we made a higher high here, and we're making lower lows. We see that here, 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 and here. And it's squeezing the price. This is a horizontal zone because it could not make a higher low, and it could not, make a higher high, and it could not make a higher high. So there's a resistance here resisting the price from going higher than the previous high. So there's a lot of sellers here selling and dumping their positions at the highest point it's been. And then the bulls are still pushing the price closer to the resistance. So there's a squeeze that is occurring. And at this point in time, this is the apex of the squeeze, meaning that there's a resistance and a support, and the price at the very, very end is going to hit an apex, the price in, or the place in which the two zones come together, and that is the apex, and that is right here. And when the price gets closer to the apex, the bulls are fighting and fighting, and they have to make a decision. Once it breaks either support or resistance, that is the direction that the confidence is going to. So in this circumstance, let's just draw in our key zones on the actual chart here. This is the level of resistance, and let's draw that red. And then we see the higher lows connect very well right around here. So we could draw it from here because we don't see it perfect, but we do see some hesitation right there. And then let's just draw it like so. And then let's get our little projection zone. So we give the price a little bit of room. And that's how it's going to look, right around there. So this is the overall structure of the key zone that is moving upward. And then let's just draw in the flow here. So we're seeing higher highs and higher lows all along here. This is a higher low, this is a higher high, and we're not able to make a higher high. So there's a lot of sell pressure here, and the price has to make a decision. It makes a decision to move to the upside. This is to the downside, sorry. This is the first major move to the downside. This is a lower low than this low. So this was a low right here, and it's still holding the higher lows. This is a lower low. We can see this is a low, and it made a lower low. First sign of a potential bearish move is to create a lower low and then a lower high. This is the previous high right here, and now we made a lower high. Now this is also in line with the resistance from the previous low, which turns into new resistance, right? Sorry, the support from the previous low, which turns into a new resistance. We can see that right here, as well as the ascending trend line. So we have a zone of confluence where there's going to be a lot of sell pressure. The first level of confidence is just from the previous low, which is right here, turns into a new resistance. That's the first level of confidence, or confluence, sorry, which gives more confidence for the bears. The second level of confluence is going to be this ascending trend line, which is connected 1, 2, 3, 4 times. And then we see a bit of hesitation here. So I guess 5 times right here. And then this is also going to be a previous support equals new resistance. So because it was a previous support, so if it's a resistance, it turns into a new support. And if it's a resistance, it turns into a new support. So basically either way goes around, but basically new resistance equals old support equals new resistance. And because this was a support, it turns into a new resistance. So this is a very, very key zone on the chart because there's a high level of confluence from the sellers that there's going to be sell pressure at that area. And that's exactly what we saw. We saw the price break the zone, retest the area of sensitivity or the zone of confluence for the sellers, and it immediately got rejected down. This is showing me that there's a lot of sell pressure at this area, and there's a lot of strength in the confidence for the sellers. Now that we made a lower low, we made a lower high, and then we made a lower low, now we're looking for that lower high to form, which is going to be here. Now we've made a lower low, lower high, lower low. Now we are in a bearish trend, in my opinion. Now we're going to be looking for those lower highs because a trend goes like this. We're looking for the highs to enter short. We don't want to enter on the lows. We don't want to enter on the lows. We want to be entering at the highs so we get the best risk reward situation we can. And that's the whole point of waiting for pullbacks. We want to enter at the pullbacks, and that's the best possible risk reward that we're able to have as traders. So we see a very strong trend, a bearish trend down, and then make a lower high, lower low, lower high, lower low, lower high, lower low. So that is the market shift and the market trend. But what we really want to see is these zones of confluences. This is the key zone that I really want to be illustrating, and the thing I want to make sure that everyone understands is these zones of confluences where we have the ascending trend line and the horizontal previous support, new resistance. Those are the types of things that you really want to be looking at for your technical analysis on the bigger term time frame. So let's just draw in this zone here as well. And we can see it was a previous zone of resistance. We can see that here, previous resistance, new support, resistance. Definitely a little bit choppy in this situation, but we can see the first level of support, second level of support, and then it turns into a resistance. And that's where the key zone of confluence is going to be for the sellers to initially attack the price on the way down. So overall, that is how the .com bust went. Just looking on the weekly, we just want to illustrate the zone of confluence for the sellers and then the key shifting point from higher highs and higher lows to lower highs and lower lows. So now that we've identified what to look for in a shift in trend, we can then look at the 2008 financial crisis. So it looks kind of similar. We see the top here, the resistance, being very similar to the previous high. So this is the high from the .com boom at 1530-ish. And then we see the price go a little bit above that, but it's staying around this zone. And then obviously the next expansion phase just absolutely demolished that previous high. So that's what QE and low interest rates can do. So let's talk about this 2008 breakdown. Let's just move all our drawings and start from scratch. So we have a very, very nice uptrend here where we're seeing higher highs and higher lows. This is a high, this is a high, this is a high. All these are a high. We're seeing a high, we're seeing a high. And then same thing with lows. We're seeing higher lows. So it's forming a very nice bullish trend to the upside. Now what we want to identify, like again, is going to be our ascending trend line that's going to be connecting the lower highs, or the higher lows, I should say. So in this one, what I see is this trend line right along here. And then also we also have a smaller one that's going to be right here. But for now, let's just draw in our first level of the trend line, which is going to connect the highs right around here. Oops. And this goes a little bit lower to this guy right here. So that is the trend that we're able to identify. And let's just draw in our projection zone. Going to put that a little bit higher just so it's a little bit cleaner on the chart. And let's just place that right there. So that is the overall structure of the ascending trend line. And then we also have our resistance right here. Let's get our rectangle here. I don't know why it's not, there we go. There we go. There is our horizontal resistance. So the apex would be somewhere along here. Obviously, oh my gosh. Obviously we didn't close anywhere near this zone. The previous one had the price come way closer to the apex, but this had a lot more aggression and a lot more confidence from the sellers. And let's draw in a couple more zones here that we can identify even before we get to this side of the chart. So even if we are not able to see the right side of the chart, we can see that this zone right here is a previous level of support because we see that right here. all along this area. We see that uses support, previous resistance, so we can identify that as a key level of support. And then a mid-range zone would be somewhere around here. Let's just make that white so we can see that this is a mid-range zone. So just looking at it, not even looking at the downside, just looking at the upside, we can see our key zones within the consolidation. And once we're able to see that the price is not able to make a higher high, then we have to raise our eyebrows and say, okay, it's not making a higher high. Maybe this could be a shift in trend. And with the weekly chart, with looking at the bigger time frames, it's easier to understand the shift in trend. You might not be able to catch the very high, because if you're shorting here, it could very well make a higher high. You got to really ensure that you're going to be entering and exiting at the highest probability points. Excuse me. So we want to wait for a confirmation. So a confirmation would be, first, to break the horizontal zone of support. The second one is to break the ascending level where the price is making higher highs, and we want to break those higher highs and higher lows being formed. So we have, let's say, a trade right here, and it's forming consolidation and going up and down. Once we see there is a key level on the chart, this is where we want to see the price break below. So let's say we break above, and then we're trending here, and we are connecting. Let's say there's like another touch here and another touch here, and this is connecting all the lower highs all along here. What we want to see the price do is break the zone of confluence, which is going to be this area right here, and then retest and see that there's going to be a lot of sell pressure coming down, validating this zone as a key zone for sell sensitivity. Once we're able to identify that this is a key zone of sell sensitivity, then we can look to short, because we have two zones of confluences that we're able to identify. So right here, exact same thing happened, where we saw the market start to make a lower high and then a lower low. So let's just draw in our zone again. So we first initially saw the high here, and then we saw another high, could not break the previous high. That is our first indication. And then we made a smaller lower high, still making those higher lows though, higher low, higher low, higher low. Once we made the lower low right here, this is the previous low, the lower low, then we're going to have our eyebrows a little bit raised, and we're going to go, okay, this is a lower low. We're wanting to see a lower high form, and that's exactly what happened. We got an initial rejection here, but the key lower high is this zone right here. Because of the two horizontal resistances, we did respect the mid-range zone instead of the lower one, but we did inevitably get rejected very hard off the lower resistance and then immediately dump down after. So that's what we're looking for, is to initially break the ascending trend line, and then also combine that with a horizontal zone of resistance, which we can clearly see on the chart, which then provides a zone of sensitivity where buyers and sellers are going to be located. And then because we're below the zone and we've already made a lower low, this is a high probability setup for a lower high to form. And that's where we want to look to potentially enter, because it has the highest risk reward parameters. And once we saw the lower low form, then we can assume that yes, this is a bearish trend. We are looking to form lower highs and lower lows. And that's exactly what we saw, where we saw a low, lower high, low, lower high, and then a massive drop off in price. So ideally, as an investor, you won't be looking at charts, but as a trader, you can identify the shift from making higher highs and higher lows to lower highs and lower lows, and you could potentially sell before the massive drop comes, because 80% of something is better than 50% of something, even if you're holding the same stocks. That was a really, really crazy move for investors, and you do not want anything to do with it. So if you can understand TA and understand the market structure, you'll be able to save yourself from some moves like that. So now that we talked about 2008 as well as 2000 in this chart here, we can then talk about this current expansion phase that we are in right now. So this is why I was looking at this particular situation in the way I was talking about it. So we didn't have a perfect high form right here, where we had a higher high form. So let's just go and take a picture again. And this was the horizontal zone that we were looking at right around here. So we see a lot of bulls come in, push the price up all along here. And then yet again, we see the price get held one more time here. And we also see a trend line that connects this zone here all along here. So then I'll just draw it to make it easier so you guys know what I'm talking about. And it was, I think, right from here. And it was forming something along the lines of this. So this is where I was looking right here. So this was before that occurred. This is what I was expecting, is for the price to hold this zone. Now, if we were able to hold this zone, I would have definitely looked to potentially short the market. But because we didn't, we got to close above it. That is signifying that the bulls are still present. And we did get a pretty strong level of rejection right around here. Let's just draw in our minor zone right like so. And then let's talk about it a little bit, talk about market flow. So we're holding these nice higher lows, right? Higher low, higher low, higher low. All these higher lows are pointing bullish. And then we see higher highs here, higher highs, higher highs, higher highs. We got a correction down, and then we're still seeing the market trend up, higher high, and this is a higher high. So we aren't seeing that very strong horizontal resistance form as of yet, but this lower low did give me a bit of an indication that we could see the trend start to move back to the downside. And what I was really looking for is once we broke this, like once we were in here and broke this key zone, I was like, okay, this is a potential move for a short here. We did get a couple bounces, but what we did do is actually hold below the zone of confluence, which is right here, because we were holding this trend line and this horizontal mid-range minor trend line, or horizontal trend line as well. And this provides a zone of confluence for the sellers in order to attack the price, because there is two levels of confirmation. We did get that. We broke this zone, this support, and I was definitely looking, I was talking about it pretty extensively in the Discord. If we are able to hold below this zone right here, we're really looking to short, because we've broken this trend line here. And then also, if we are able to hold this zone, kind of like we saw in the previous, if we were holding and then start to trend back down, this could be a low, and this could be the next lower high. So let's talk about market structure a little bit. So this is a high, this is a higher high, and then this is a lower high, right? So this is a higher high, and then this is a lower high. And this is a low, this is a low, this is a low, so it's making higher lows, and this is the same level of a low, so it hasn't made a lower low. So right now we're made a lower high and the same low. Here we made a lower low. So now all we need is one more lower high in order for me to think that the market is starting to trend down, because lower lows and lower highs create a downward trend. But what happened is we did not get any close of the weekly red candle here at all. We're not seeing a curved price with some bearish engulfing candles or anything. We are seeing the price hold above the zone, making green candles, closing the week off higher than it did the start of the week, every single week, all throughout this section here. And that is signifying that the bulls are still in charge and the bulls have confidence. So I'm not going to look to enter until we have confirmation from the price action. And that's why we didn't even look to enter short at this point. But what we're expecting when the price was around this zone here is if we were to see a lower high, like here, if this was a lower high and the price started to trend down, now we see the downtrend start to emerge, where we see a lower high, we see a lower low, and then we see a lower high, and then we're seeing a lower low. So that's the overall structure of the bear market for any trend, and that's what we were potentially seeing in this situation, but we did not actually make that lower high. We made the high even, so this was the previous high. Let's just make that an H. So this was the previous high, and then the next high was the same. It wasn't lower, so it's going to signify that the bulls are still in control and have confidence to push the price up. And once we broke past it, previous level of resistance, new level of support, we can see that right here, and then we made our uptrend. So the market is still looking pretty solid. It's pretty crazy to think, but that for me is the overall structure of this current market right now, we can draw a couple more trend lines here, just connecting the higher lows right there. And that's like the small trend line that I'm looking at if it does come back and bounce. We can also have a zone of confluence by drawing our previous resistance right here. So this is a zone of confluence right here. Let's just make that red, and we have a bit of a wider zone for our first horizontal zone, which is right around here. So there is some pretty crazy buy volume in the market right now. A lot of alts, or not a lot of alts, a lot of stocks are moving up. Tesla has been absolutely killing it. But this market is not done yet in terms of the price action. We are still looking for those lower highs and lower lows to form, kind of like we saw here, before we can really say it's going to have an absolute dump in the market. But for now, we're just seeing the market rise and rise and rise. Like anything in the financial space, it usually takes the staircases up and the elevator down. So just be careful, just be cautious. If you are investing in the stock markets in the United States, you had a phenomenal year in 2019, and 2020 does look pretty good. We're already almost on January here. But all I can say is be careful. Like, look at simple price action charts. When you understand that, you know, we have made a resistance and you can't get higher than that, and you're making lower lows and lower highs. You know, look at the structure of the overall pattern of the price action and ask yourself, do you think that the market is now in a downtrend? You know, using simple price action, using simple indicators, I mean, such as 200-day EMA, is a good strategy to some people, but I personally value price action over anything, and validations of key levels of price. I really look for simple solutions to understand the market, and simple trend lines and horizontal zones of supply and demand are going to be the key things that I look at in order to evaluate the price. So I hope you got something from this. It is definitely going to be interesting to see how it all plays out. But just looking at the price action, I am not expecting a massive dump down. Like meaning, you know, something along the lines of this. We just see a major market crash. I'm not expecting that to happen really anytime soon. We have to see the price weaken. We have to see confidence lost from the bulls, and then confidence start to gain from the bears before we really start to look to short the market. But for now, this is looking like it could just continue onward a little bit. We could see pullbacks. That's not a problem. Like I said before, this is a zone of confluence, so we could pull back all the way up to this point here. But until we see the key levels of resistance form, until we see the key levels of support break and retested as a new validated resistance, we can't actually take short positions because it's not in our criteria. Our criteria has not been met, even though there's a lot of fundamental factors that give us indications that we should be shorting the market in terms of the economy and the health of the economy. But overall, I am definitely not looking to short yet, and I do think that we could still see the continuation upwards from the S&P 500. So I hope you got something from this. If you have any questions, feel free to leave a comment in the section below. And until next time, happy trading.